So it's very much like live TV. So I believe we are now live. So I believe people are joining our webinar. They're gradually logging in. Many thanks for joining us today. My name is Philip Jarman, and we'll just leave it for a couple more minutes just to gather as many people as possible so they can click in. So just bear with us, and we'll probably kick off the webinar in a couple of minutes past 2. I'll keep everyone fully informed as to when we're kicking it off. Well, good afternoon, everybody. I'd like to thank everybody for taking the time out of their day to join and participate in today's webinar. My name is Philip Jarman. I'm co-founder of CESO Global, and once again, I'm delighted that you've joined us today for our first webinar of the year. As CESO likes to do at the beginning of every year, or certainly during the first quarter, we like to hold a webinar and understand what the coming year may hold us. So today we are discussing the West African economic outlook for 2023. Of course, the reason for considering this topic is always with a view on how it affects West African real estate and that industry. That's what we're interested in. That's what our panelists are interested in. So typically, as in most economies, the real estate sector is often a reflection on the performance of the overall economy. Real estate performs well when economies are doing well and drops off during periods of recession. So to help me discuss this topic today, which is West African Outlook for 2023, I'm delighted to introduce my superstar panel. We really do have a fantastic group of panelists today. We have Mr. Kunle Barry Oshin Aja, who's chairman of UPDC and non-executive director at UPDC. Shay Ayin Lola, I do apologize, Shay, vice chairman of Sal Property Development. Kojo Boadi Abuwaja, co-founder of 1111 Ghana. And we also have Dr. Wilson, who's a BBC commentator and economic lecturer at SOA. So he's going to speak on the economic themes. From the CESO team, there's obviously myself. We have Daniel Block, who's the CEO and co-founder of CESO. He'll be providing market intelligence on Nigeria. And we also have Ms. Dansoa. She's VP and Strategy Operations, who'll be providing market intelligence on Ghana. So we really do have a packed schedule. And that schedule looks like this. I'll be doing the introductions, then I'll be passing over to Dr. Wilson to provide an economic overview on West Africa for the coming year with a specific insight on real estate. That would be about 5-10 minutes. After that, there'll be a mini panel with the CESO participants. That will be Daniel Block with the Nigerian overview and Dansoa providing the Ghanaian overview. And then we'll be on to our panel with Kunle, Shi, and Kojo. And there'll be a remaining 15 minutes ideally for Q&A. So let's get started. As mentioned before, my name's Philip Jarman. Before co-founding CESO, I worked in finance for UBS Wealth Management, where I helped generate investment strategies for ultra high net worth African-based clients. So I've been working in Nigeria now for coming up to 15 years. I co-founded CESO with Daniel Block, my business partner, CESO CEO, in August 2017. So we've been representing properties in Nigeria, Ghana, and the rest of Africa for coming up to 5 years now. And we absolutely love it. So just as a reminder as to what we do at CESO, a large part of our business is as a digital real estate broker. So in terms of what we do, think of us as the Zillow of Africa. So you can come onto the CESO marketplace, which is here, where we sell properties. We sell properties on behalf of property developers. So these have no or limited transaction history. So they're trusted by us. So we sell properties as well as access to property related services. So as you come onto the platform, you can search for properties you like, but you can also access other services you need to buy that property with trust. So law firms, for example, you can hire facilities management, and we also offer access to finance should you want that. So we've created a one-stop shop for property transactions through our unique ecosystem of services, and we're really proud of it. Sitting beneath the CESO marketplace, we have supporting platforms that include the CESO CRM platform for our property developers, as well as the CESO Global Land Registry platform that's supported by blockchain technology that's very innovative. So collectively, they provide a fully integrated end-to-end technology stack that services the entire real estate value chain, and we're very proud of it. We love what we do, and we love where we work. So let's get stuck into, as we see, this is the CESO analysis, CESO Global Overview for 2023. and 23. So what have been the global headwinds for 2022? Will they persist into 2023? There were 4 headwinds that we've previously experienced. War in Ukraine, devastating war that doesn't appear to be any short-term resolution. Headwinds will persist, especially if the conflict escalates. However, what we've found is that economies have adjusted, especially in light of the impact on supply chains and the cost of energy, to find alternative sources, for example, of energy. We can get onto that in a minute. But this is global GDP growth. It remains fragile with weak prospects for the coming year. I've spoke about the disruption of supply chains. The war in Ukraine has had a significant impact on these, causing disruption, delays, and of course, increasing cost, which is added to the general inflationary environment, which we will go into it a little bit more in more detail. Not least, this is creating an environment of great uncertainty, making it difficult for companies to make long-term investments. So we think that there has been some flexibility in terms of what the international market can do in terms of finding alternative energy sources, but if the conflict escalates, that does bring in extra headwind. Rising energy prices and inflation, I'll go into in a minute, but as you can see, this is we can see the impact of the war in Ukraine had on price of oil, but now alternative sources have been found, so we can see the price is actually reduced to a pre-war level. We expect this trend to continue, so inflation to reduce over the coming year, but all bets are off, obviously, if the war escalates. This now sort of getting into the nitty-gritty. We can see the inflation figures at the top for Nigeria and Ghana from 2018 projected into 2024, as well as the dollar cedi rate. Sorry, let me just go up. I'm jumping ahead of myself. This is the dollar cedi rate, as well as the naira dollar rate. Now, in terms of inflation, 2022 was pretty hellish in Ghana. 27.8% is pretty high, as well, in Nigeria as well, 18.92. These are projected to go to decrease over the coming year, which is what we all want. They are still pretty eye-wateringly high, though. We can jump into where we think these headwinds are coming from in 2024. The cedi obviously has weakened significantly. This drop here came when the IMF came in. And just as a sort of anecdotal story, when I left Nigeria, I've obviously been back since. When I left Nigeria because of COVID in March 2020, dollar naira was 360. It's now today around 775. So that's obviously significant currency depreciation in both Nigeria and Ghana. So what's the main talking points for 2023 for us? So we've spoken about currency devaluation. Nigeria has experienced significant devaluation of its currency in recent years, as demonstrated. So this has led to an increase in the price of imported goods, as it takes more naira to purchase the amount of foreign currency. Shortages of goods, particularly food, fuel, and electricity. People on the ground will be very familiar with this. This is a story that we are hearing back a lot of. Fiscal and monetary policies, not least the naira redesign for cash withdrawal purposes. This is something that's very topical. It's very relevant at the moment in Nigeria. The policy was implemented with good intentions to reduce the amount of cash in circulation, try and bring down inflation. Unfortunately, the policy has caused serious issues for people on the withdrawal side. And the other issue that we see in Nigeria is obviously insecurity. Fulani herdsmen in the middle, other security challenges in the north, all contributed towards higher pricing in Nigeria. In Ghana, we see similar issues, bar insecurity. So you've got obviously the exchange rate. We've touched on the cedi decline relative to other currencies. So this has led to an increase of cost of imported goods, which obviously contributes towards inflation. The large fiscal deficit of 9.2% of GDP. So in light of weakening currency and the downgrade of its bonds to CCC, there is a fear that Ghana may not be able to meet those obligations. This was one of the reasons why the IMF came into Ghana, lending at about 3 billion to address these macroeconomic economic imbalances, as well as enhancing its debt sustainability, and also supporting balance of payments. Once again, this is another thing that we've identified, balance of payments crisis. So Ghana is currently struggling to generate enough foreign exchange to meet its internal obligations. So hence the reason why the IMF have come in to shore things up. Before we jump on to Dr. Wilson, who will, I'm sure, highlight everything that I've missed, the huge story that's coming up in Nigeria is clearly the election. These are the three main candidates: Tinubu, Atiku, Peter Obi. I dare say that Tinubu is probably the favorite if you were to ask people. And in terms of where we see growth coming from, Nigeria, obviously for 2023, 2024, we want it to be doing better. Ghana the projection seems to be coming out of this this currency squeeze and then growing. So look, at this point, I'd like to stop sharing my screen so we can then jump to one of our star panelists, Dr. Wilson. Dr. Wilson, could you unmute and put your camera on? Fantastic. There you go. So in short, it would be great to get your view on what I've missed and how you see these headwinds affecting the real estate space within 2023.
Yeah, thank you very much for the invitation, and that was a great presentation. I think there must have been a mix-up somewhere. I'm not a doctor yet, so still not done with my PhD program. So it's Wilson.
Apologies, sir. Apologies.
Yes, that's fine. So I think you've covered much of the key areas, and I have about 5 minutes, so I'll just quickly run through three key areas that I think are also quite important, when we talk about, the economy and also real estates, in these two countries. And I think one of them has to do with, diaspora remittances, right? In Nigeria, we've seen in the last couple of years, how this has become one very key, important aspect of the economy, especially when it comes to the real estate market. So if you look at the data in 2021, right, we had, about $20 billion, and some estimates would put it at around $20 to $25 billion worth of inflows coming from abroad into the country. And in fact, this is even much higher than actual total foreign investments that have come in. In 2021, this was put at $6.7 billion. I mean, talking about total foreign inflows of investments. And when you look at FDI, which is investment in the real sector, basically has been under $1 billion in Nigeria. In 2021, it was some around $700 million, right? If you then look at actual oil revenues, around $2 billion also in the same year, and overall revenue is $13 billion. So the point here is the fact that diaspora remittances, right, at $20 billion, has even exceeded oil revenues, from revenues from the sale of oil in Nigeria, and even total revenues, right? If you look at also non-oil revenues. And I think this is quite an important trend, especially when we talk about real estate. And also in Ghana, data shows it's somewhere around $4 billion. And then, this basically looks at the formal channels, right? When we include the informal channels, for both economies, right? A lot of things are not captured, and that tells us that this is perhaps a very important component that needs to be paid, given more attention to, especially both from the policy side and even for investors. Where much of these funds has gone to in these countries. There's a study by a blog by the World Bank recently. I think the main report has also been been published, which showed that, it surveyed a group of participants, and about 52% of them said, they had sent money home to build or buy a house, during the survey period, which was just about 2 years ago. And I think so. A lot of these monies coming in. We've seen lots of development happening across different cities in both countries. And one key trend also, which Philip, talked about, is the fact that we've seen massive, significant currency depreciation, across in both countries. And for those in the diaspora market, right, this is sort of like an incentive to channel in more funds into the country, and of course invest or buy properties. The other point, which I think would be talked about much later, is the fact that we've seen this rapid urbanization, people moving to the cities, even though in Ghana about 58%, has a share of urban population is about 58%. And in Nigeria, it's about 53%. But then we've seen that this tough economic, outcome that we're seeing in the last couple of years also means that even more people would keep moving to the cities to search for greener pastures. And then, that in a way would also influence the real estate market, even though we've seen that there's still some level of concentration in both countries, in Accra, Kumasi, and a couple of other places, and in Lagos, Abuja, particularly towards the Lekki axis in Lagos. I think this is also one key point. And finally, I think for Nigeria in particular, there is the government agenda, which is also very important. In fact, the fact that their plans, if you look at the recent medium-term national development plan, there are plans to invest heavily in the real estate market. Whether or not this will happen is something that we're all looking out for, right? The MTNDP, estimated public investment in real estate to be around 3.5 trillion naira between 2021 and 2025. And if you look at the three main candidates that you cited, Philip, all of them, also have in their plans how to, transform the real estate industry. Some majority of them would focus on the low end segment. Atiku has a 1 million housing units agenda. Tinubu has a 5 million new homes, within the next 4 years. And Peter Obi, I think, focuses more on creating the financial incentives for private capital to moving into the social and affordable housing space in Nigeria. Then finally, I'd say in terms of the outlook, I think it's clear to us that this year is going to be quite tough. Ghana expected to grow at some, 2.6% in economic growth at 2.6% in 2023. Nigeria somewhere around 3%, but we've seen the World Bank, revised, their growth for this year to below 3%. And this clearly points to the fact that, election comes with uncertainty. And also in terms of inflation, we've seen just a few days ago, yesterday, inflation, at above 20%, 21.8% or thereabout. And then, in Ghana, it's also above 20%, but for the year, I think in Nigeria, we should average about 18.5% a full year, or somewhere around 19%. And also for Ghana, it's still going to be much more above 20%. And with the pressure on government finances, I think it's going to continue in the medium term. Exchange rate pressures, will continue. And, in Nigeria, much of the topic has been the debt accumulation, the fact that there's not enough revenue to service these debts, right? And what we've seen also in both countries is the fact that interest rates have been trending upwards. In Ghana, it's above 20%, but in Nigeria, it's approaching 20%, somewhere around 17.5%. And also this has implication, especially when it comes to crowding out private sector investment. The other point is to talk about the cost of living crisis and how that will also lead to overall cost of building materials, some of which are majority of which are also imported in both countries to some extent. And I think in the long term, for me, when I look at the real estate sector, I think one of the ultimate path to strong growth, right, would be a case when we get to see that massive transition of low income earners into middle income earners in both countries and even for the region. The other option would be to say, can there be some sort of housing that, for the low income earners or the middle income earners? And of course, that would, come with lots of government support, particularly in relation to policy and finance and all of that. So I think I will just stop here for the sake of time.
Wilson, many thanks. Just a very quick question from myself. Are you able to very quickly identify the major differences across three presidential candidates and what it could mean for the economic outlook for this coming year?
Well, yeah, I picked when you said Tinubu is the favorite, right?
Yeah.
During your presentation, I think majority will disagree with you on that.
Okay.
Some would say Peter Obi, of course, is the favorite. Especially because of he appeals a lot to majority of the young people. But then, I've gone through all of the manifestos of all three candidates. I think some are heavy in some areas. For instance, Peter Obi's manifesto quite heavy in terms of the power sector. I think he spoke a lot on that. Atiku's manifesto very heavy on private sector involvement. I think that's not new to us because he's would I say leaning towards more of like a capitalist, right? For Tinubu, I think he's also talked a lot about private sector deregulation of the downstream sector, removal of subsidy and all of that. But I think it's, when whoever will win, because right now I think it's not so clear. If you speak to people from the Tinubu camp, they feel he's going to win. If you speak to people from the Peter Obi camp, they also feel he's going to win. When you also look at the campaigns, so many, different supporters from different age groups, different part regions and co. Who will win? I think I'm not certain. Maybe some of the panelists can shed more light on that. But then in terms of the policy going forward, right, I think some of the key points, key issues, relating to subsidies are very important. That's something of a burden, that the next administration will have to deal with urgently. The issues relating to macroeconomic stability, foreign exchange, inflation, and all of that. So a whole lot of issues, but I think whoever wins, first of all, needs to put up a cabinet together as quick as possible. We cannot, afford to make the mistakes we did in 2015, where it took us almost 6 months because things are different now. I mean, if you follow the news, you'd see what's happening with the Naira shortage and all of that. So I think it's time for us to get, that pragmatic leader that will make some of these reforms that we have, put, out there, whether at the Nigerian Economic Summit Group or even as public commentators, right? So there's nothing new actually, it's just to hit the ball rolling, and improve the business environment and the lives of Nigerians.
Fantastic. Well, look, thank you so much for that. Please stick around for the wider panel that we'll be having in the Q&A at the end. Obviously, when we get to the real estate developers, it would be fantastic to speak to them about about who they see as being as potentially who they see bringing what to the table, and obviously the stability that we all hope can come as well afterwards. So everybody, look, at this stage, I want to introduce my colleagues at CESO. So we have Daniel Block, co-founder and CEO of CESO, going to be providing some insights from a CESO perspective on last year and looking forward, where are the opportunities. And also Dan Soa, who's a VP of Strategy and Operations. She'll be providing insights on how we're getting on in Ghana and what are the opportunities. Okay, this is a Nigerian overlook from Daniel. So yeah, Daniel, there's some interesting themes coming from Wilson. Obviously, he spoke about population growth, which the demographics in Nigeria, which are pretty unique as well. From a CESO perspective, how have we found it last year, and where do we see the opportunities?
Yeah, definitely. So thanks, Philip. And first, I'd also like to say thank you, everyone, for joining. It's a pleasure to have you today. And thank you so much to our panelists and partners for this event. So what we saw for CESO, and so I think we got some great, macroeconomic view. And we look at, both positives, and challenges, in the market, looking at the remittances, and then looking at, the challenges with the currency as well. So what we found at CESO, in kind of a more, on the ground, anecdotal experience at our ends, we really saw a great year in Lagos. As a company, we focus specifically on Lagos right now and a little bit of Abuja. So really potentially not seeing as much exposure in other areas of the country. So we saw a large growth, and I think really, and we'll talk about this more in the, I think, next slide, is really especially in the growth of these new areas, Ijebu-Lekki, into Epwe, and others further down in the mainland. And so I definitely agree with Wilson that what we need to see is more housing prices and opportunities that can fit with the budgets of most Nigerians, bringing people from the lower class into the middle class. And so I think what we have here is a breakdown on the average cost of land sales in a few different areas. And so we can see, especially further down in Ijebu-Lekki, you're seeing a much more affordable square meters. I think as we all know, for anyone who knows much about Nigeria, right, there's a very expensive real estate in BI, Ikoyi. You're looking at prices similar to the UK and the US. And so what we're really seeing is a lot of growth, and what we had, I think, a great year of last year is properties in this axis right here. And I think we go to the next slide on the really what's being built there and the developments. And so you see so much being developed into this new axis, which I know our panelists will discuss as well on the Nigeria side. So we have the new airport that's going to be coming in this Lekki axis, the deep sea port, which was announced, the free trade zones, many large-scale developers, the Dangote oil refinery. There'll be the new Fourth Mainland Bridge, which obviously is not as far down in the Lekki Peninsula, but will make a massive an impact. And then really exciting for those who haven't seen, I encourage you to look online, the Lagos rail transit. So, a beautiful new rail system within Lagos, also direct rail from Lagos into Ogun State and Ibadan, which has been finished. And so what we're also seeing is looking even at prices, we see a lot of success in real estate in this area, going in between, 15 and 25 million naira. So kind of a lot of success in that range. And right now, most of the developers in these areas who are building these, more larger estates, they're doing more flexible payment plans, looking at 3 years. People can look at developments such as Mixta and Lackaway, where they've done, beautiful job, mixing nature and the residential real estate, the commercial aspects as well. So, really exciting to see the growth in that area. Also we see growth coming, further up in the north, the kind of bit north in Lagos and the mainland. And so people building around that area, developers building, on the border of Ogun State and areas that are developing. So, for us, we see a lot of, opportunity and potential. And I would just note that it's really been driven, like Wilson said, in these diaspora remittances. I didn't know that stat, but that's amazing that 52% of remittances in that survey went to real estate. Yeah. So we're really seeing a lot of growth. And what's exciting is, how that's contributing towards the growth of more affordable estates. One thing I just want to touch on is that we're also seeing that more was an interaction last year that we'll see more of this year is international developers We're hosting soon a large-scale Japanese developer who's done over $3 billion in affordable housing, and CESO will be hosting them in March, and a few other large-scale international developers that see the story of migration to the city, population growth, the demand for housing, the remittances, which you know is one of the largest volumes in the world. And so one thing we can see is that one big issue is the affordability. Affordability is not just price, right? It's the payment plans, the mortgage opportunity. And so one thing that I think a trend that we're seeing with CESO is that investors coming in, bringing capital for these larger developments, which kind of with the quantity will lower the price. And then in addition, since they have the capital on the development side, we'll be able to offer longer term payment plans. So even in lieu of a mortgage, there's still an opportunity with these kind of new large scale developments, which is one thing we're very excited about. So thank you very much.
Fantastic. Yeah, really interesting point Daniel made about international developers looking at this space, because what we have also been made aware of, and this is a very nice segue into conversation with Dancer about Ghana, is this 600-mile stretch of coastline between Abidjan and Lagos, which you can see, which is the world's most rapidly growing urbanization region. So urbanization in Nigeria is happening about 4.1%. In Ghana, it's a similar figure. So it's projected that this stretch of 600-mile coastline will attract around 51 million people by 2035. So this is quite an astonishing growth. It's supposed to house 500 million people by 2100. Now, I dare say, there would be no one here on this panel who's going to be around at that time. Be nice if we were, but it does go to show the insight in terms of growth that's happening along that coastline that's capturing both Accra as well as Lagos. So at this point, Dancer, welcome to the panel. Really excited to hear your insights. Obviously, CESO has a very active presence in Ghana as well. I have included the demographics of Ghana. I'm a bit obsessed with demographics at the moment, as well as population growth. But it would be great, I'll just pop onto the next slide, just great for you to give insights into where we as a company have seen sales and where we expect to see growth in the coming year, despite the headwinds that we've spoken about. I think it's fair to say that Ghana has done very well for us in 2022.
Yes, thank you so much, Philip, and you are accurate. On the CESO front, we have seen quite a shift in demand dynamics as far as real estate is concerned. There has always been interest from Ghanaian residents living abroad, and they usually constituted about 20% of all purchases. But we have seen that over the last couple of years, it's not limited to residents, but we have interest from the diaspora. That's individuals who are not residents of Ghana, probably have some distant ties to the continent, but there has been a lot of interest based off of the government's initiative, the Year of Return, which gave Ghana so much popularity, and that has transitioned into beyond the return. And so we have seen growth in individuals from the diaspora, particularly from America, who are looking for opportunities, not only as investors, but actually looking to relocate into onto the continent, particularly in Ghana. And how this plays out, at least from the CESO front, is that obviously Accra being the capital, we see a lot of attention going there. That's the launch pad, the touch base of people coming in, probably the most cosmopolitan parts of Ghana. But apart from that, we have seen growing interest in other locations, particularly Ebri, Pram, and beyond, and then also Kaswa. And
let me just switch back onto this so people can see where exactly where those locations
are. So we
are.
have, Ebri, Pram, and then Kaswa. Now, Ebri, the popularity it has gained is just because of the scenic nature. It's completely mountainous forest area, and that appeals to individuals who are used to living in communities like that. And Kaswa and Pram, they're coastal locations, and they're not the only coastal locations that are springing up. And this ties into what you shared about that whole coastal stretch becoming a megapolis in the next 12 years or so. And on Cecil's front, based on the transactions that we have seen and the ones that we have participated in through our investors in the deal room, we know that probably that is where the largest focus is right now for investors. And it's actually very interesting and good to know that people are looking outside of the capital. Accra has gained so much attention over the years, but there's so much undeveloped land in Ghana, and it's very interesting to see how everything is going to play out. Now, if we go back to the slide with the tourism figures, yes, you will notice that Ghana, as at the end of 2022, we're almost back to pre-COVID levels, pardon me, pre-COVID levels of tourism. And this just shows that people are comfortable to travel again and seek out opportunities in the country. Now, what's also interesting is that locally, it's not been the easiest couple of months, especially with the cedi depreciation, the IMF, the recent debt restructuring. Yeah. But looking at the positive side of things, and just so that our audience know that the opportunities aren't limited to a diaspora market, what this has resulted in is individuals looking for opportunities in real assets, i.e. real estate. Yeah. And so we also see locals who typically would probably buy properties to live in for their retirement homes are now looking at it as an alternative investment, an alternative and safer investment. And you often see the hashtag that there are no haircuts in real estate. And yeah, and that's something that to a very large extent is a hedge against inflation, and in our economy is also a dollarized asset. So we do see a lot of growth and a lot of opportunity that is coming out of everything that has happened. Like I mentioned, the year of return has transitioned into beyond the return. And so there is still a lot of attention on Ghana, and the government has positioned Ghana as the ultimate cultural and investment experience. And we are seeing developers and investors taking advantage of this. And I mean, the result is that the nation gets developed, and we're hoping that as more people come in, prices will reduce. That would affect the lower and middle income buyers. And I think one thing that's important to address or to bring up is affordability, which Daniel mentioned. And Cecil has pioneered with some local mortgage houses and financial institutions, the diaspora mortgage, which makes it easier for individuals to access funding to purchase real estate, and then also negotiating longer payment plans with developers just to ease the cost of investing in real estate. And all of this is going to have a positive impact and increase the demand, and investors and developers alike are well positioned to laugh all the way to the bank in light of what's going to happen in the aftermath.
Absolutely. I mean, I think the year of return was really successful in terms of enhancing and really changing the perception Nigeria had with many individuals within the diaspora, particularly within the US. It's a market that we've done very well in. And I mean, the other interesting point, I love to quote that the medium age, the medium age is 20, and they have a youth dividend. So the population is going to grow, is going to get bigger, much the same as in Nigeria. I think the average age in Nigeria is 18, which is absolutely astonishing. So there, so you're having huge amounts of urbanization, and it's very much about picking where this growth is going to happen, much like in Nigeria, along that peninsula. In Ghana, these in Pram, incredible, that's doing so well, much more affordable than Accra. So these are where the opportunities are. Dan, sir, thank you so much for that. That was absolutely fantastic. So look, on that note, I would absolutely delighted to introduce you to the superstar panel that we have. Panelists, can I ask you to turn your videos on and unmute so we can sort of get stuck into the Q&A. As I mentioned at the beginning, we have Mr. Kunle Barry Oselaja, so Nigerian developer Doyen, chairman of UPDC Hotels, NEDs for various real estate companies in Nigeria. Very pleased to have him. Sheyin Oyinlola, Vice Chairman of SAL Property Developments, again, truly experienced in the space, and Kojo, if you don't mind, I'll just keep it to Kojo. I'm struggling with the surname. I do apologize. So again, bringing in the Ghana side, co-founder of 1111 Ghana. Shay, if I could start with yourself, in light of the economic analysis that we've gone through, there are clear headwinds, but there are clear opportunities. It would be great headwinds in terms of inflation, currency devaluation, but Wilson made some fantastic points about remittance. There's that huge urbanization happening about 4.1% a year, huge population growth. Where do you see the economic headwinds for 2023, and where do you see the opportunities?
Thank you once again for having me, Phil. Like you said, my name is Sheyin Oyinlola from SAL Properties. A lot has been covered and a lot has been said. And the headwinds, like Wilson said, we have inflation, we have political uncertainties, we have security issues, we have the devaluation of the Naira, all of this, all working against the Nigerian economy. But notwithstanding, regardless, if I'm correct, the IMF reported that our growth would be slower than the previous year, correct, and less than 3%. But I believe that has been reviewed again to well above 3%, about 3.02%. What it tells you is that no matter what, the opportunities in Nigeria are still there.
Yeah.
And in our sector, for example, with SAL Properties at the moment, I would say we're more focused on the high-end residential developments. And when I mean high-end residential developments, we have smaller size developments, more bespoke type developments. So we have 10 units, you have 8 units, you have 9 units, and they're not mid-income or low income. So what we've come to realize is there's an opportunity in that market. Those that already have planned quite well against some of the challenges we're talking about. And then, of course, secondly, is the diaspora remittances. Like Wilson said, over 20 billion, and of which above 50% of that went into real estate. That's one of the reasons why we're smiling and more than happy to be on CESO's platform.
Thank you.
Regardless of the economic headwinds and the challenges, the opportunities are still there. The housing deficit is still there.
Yeah.
It has to be filled. Those in diaspora will still need to, there's that emotional void that has to be filled, which is, I've gone out. This is from the Nigerian perspective now, and I have a home where I come from. It's a little different. We don't have a lot of non-Nigerians at this point in time investing in real estate in Nigeria. So the target is still more Nigerians in diaspora who are looking for homes to live in or investment properties. So the opportunities are there, Phil. And I think regardless of, yes, it's going to be a tough year, but it's not a year where we all stop doing business. I think it's a year where we can conceive and we can execute businesses. I hope that answers your question.
That's fun. Yeah, absolutely. And Kunle, I would like to pass the baton over to yourself, just to keep with the Nigerian theme. There's been a lot of talk about headwinds. Where do you see the challenges for this year, as well as the opportunities?
Good afternoon, all. Kunle Oshilaja. For me, I think what my other colleagues have said is what is paramount. But I would say there is some form of slowdown at the moment, driven particularly by wait and see attitude to the election. Everybody wants to see what might happen, and that will happen February, certainly. And so that has slowed down the market. The last speaker talked about who might win. Frankly, I'm not too concerned about that, because whatever happens, the demand and supply dynamics of this market, real estate, is still there. It's not going to take much to change it. That's one. But two, and most importantly, any of those three, and some would even say four of those candidates, any of them that come in, I am almost confident that they will not have a negative effect on the economy. That's my instinct. Any four of them, whether it is Ashiraju, Atiku, Obi, or indeed Kwakwanso. So for my money, I think those will happen. So in reality, it's the wait and see. In terms of opportunities, because the dynamics of demand and supply is still there, the biggest market and the biggest opportunity in Nigeria, and I'm talking Nigeria now, is more of in the mid market. The affordable market is still very tough to deliver, because the affordable market is such that you need to manufacture and deliver assets, and that is still very difficult to do. The high end will still be there in locations that's Lagos, Abuja, or perhaps Port Harcourt. So for me, I think it's steady as it goes. A lull in the market because of the elections, but I'm almost confident that things will work out, short of Armageddon happening.
Fantastic. Yeah, I mean, I'd like to bring in Kojo here to give his insights on the Ghana side. I think from what we've experienced as a company that sits in both markets, is clearly there is a lot of noise, a lot of interest that always happens around Nigeria. You've got your big metrics, but what Ghana always benefits from, quite frankly, is a slightly better perception internationally. So that has really helped us in terms of positioning sales. So it'd be great to get your insights on the specific issues in Ghana. We've gone through a lot of them, but obviously they also bring with them opportunities. So yeah, if you could give your insights, please. Thank you.
Yeah, Philip, thank you so much. And again, I think next time, please add more Ghanaians to your panel. It's loaded with Nigerians.
Apologies.
2022 was actually a tough year for real estate, and actually in general for the economy. As Mr. Wilson said, we even anticipate the economic growth for Ghana dropping to 2.6%.
Yeah.
Which looks dim, looks gloomy. However, I think one of the things that, again, Dansoa, sorry, had indicated is that, look, the government in Ghana has done a terrific job with promoting this year of return and a huge diaspora movement. Secondly, one of the things that the government has actually done as well is actually created this fair foreign investment. The word I'm looking for is participation, where we actually have fair and open taxation laws for foreign investment. So we also know that part of the economy will grow. Yes, we actually are going to see a struggle for the next, I'll say, 3 quarters or 2 to 3 quarters. But the other thing that we're dealing with in Ghana is this domestic debt exchange. I'm sure you guys have heard about, where based on the IMF mandate, bonds, people with bonds are really struggling right now, and so it creates a great opportunity for us in the real estate market, where people are looking for where to put their money, and essentially this becomes this becomes a leveraging tool for us. You know, the real estate has always been seen as a safe bet, especially in an economy that's growing. So yes, there is fear and there is despair, but I also see a lot of great opportunities here as well through these headwinds.
Fantastic. Kojo, if I could stay with you in the Ghana story, it would be great to understand a recent project that your company have built, and essentially the risks and opportunities that arose around not just the construction but the sales. From your experience, where were you able to sell into? Did inflation play a significant role in, for example, raw materials? Were international buyers able to take advantage of city depreciation? That would be super helpful for us.
Absolutely. Thank you again, Philip. Once again, we're very proud to say we're building one of the best and the biggest oceanside cities in Ghana. We, as a team, we actually have 300 acres on the coast, where you highlighted Kaswa. We're proud to say we see this development as a bigger infrastructure that is going to actually affect change in the whole coastline, as we've already seen in the slides that you shared earlier. But when we started out, we realized that our currency was devaluing at a very high rate. Although we had a lot of foreign buyers, we still had some local buyers who essentially would drop the city to pay for a unit. But immediately we realized that we couldn't keep that currency. We had to just put it back into the market right away.
Yeah.
Or by the following day, it would have devalued. So those were some of the challenges that we saw. We saw that it was actually we couldn't hold on to any of the local currency because it was quite unstable. And I'll say that was one of our biggest challenges that we went through last year.
Fantastic. And Shay, from a Nigerian perspective, could I throw that back? It's very interesting to get insights from both markets. These are markets that CESO are very active in terms of, obviously in terms of sales. We very much like to partner with respected developers such as yourselves. As I say, we've found it as marketeers slightly easier to position properties in Ghana than it is in Nigeria. So that it would be great for you to talk about a recent project that you've developed and its success, how you've coped with the headwinds and how you've ultimately achieved sales.
Okay, thank you once again, Phil. So this is in Nigeria. The headwinds, be it economical, political, spiritual, or whatever you want to call it, is always coming at you, as Mr. Kunle would agree with me. So there's several challenges I could pick, but to relate it to inflation, we have a project currently ongoing called Jolade Court. In fact, we have 3 projects ongoing. There's Jolade, there's Grove Court, and we have Tamilore Court. When we started Jolade Court, COVID had just started. And one of the things we do is we sell quite a number of our properties off plan, of course, to fund. As you know, funding that can be a major challenge, or is a major challenge in Nigeria. We pre-sold 1 or 2 units, and we realized that the market moved against us as we were developing. We took some money from those that had paid, and we wanted to ensure that we deliver on our contractual terms. But for the first time, we were forced to go back to the drawing table. Luckily, with subscribers that we have a history with, we're lucky enough to have had people that we know on the project. We were able to engage them, and a number of the subscribers understood that, look, with the Nigerian currency tanking by 50, 60, 70% at the time, there was absolutely no way any developer would be able to deliver at that price. So unofficially, one of the things we had to do is to benchmark prices against the US dollar. We did not sell in US dollar, please note. as that is illegal in Nigeria, but we benchmark our selling prices against the US dollars and against the Nigerian exchange rate. So we had this agreement with subscribers, and sometimes for Nigerians in diaspora, this sort of agreement is a lot easier. In the past, Nigerians in diaspora majority were not able to own high-end properties. When I mean high-end properties in Lagos, in Ikoyi, in Lekki, in BI, you would normally find a family member who would buy you a property somewhere remote and somewhere very difficult to reach. So majority of the people who come back are never happy. But with inflation, the valuation of the Naira, you have more diasporans getting into that net and being able to afford these properties. So this benefited them and also helped quite a number of people in reaching decent deals. And then if we go on about documentation, title, paperwork, that is every day with the regulatory agencies here. I'm sure you'll save that for some other day. But in a nutshell, that's how we've dealt with one. Thank you.
Fantastic. So I would remind the participants, the listeners, once again, many thanks for listening in. Please do send your questions through so we can ask the Superstar Real Estate panel. We have had a couple of questions through from the participants. So Kunle, if you don't mind, this is actually a question that's focused on both Ghana and Nigeria. So maybe if you could tackle it from the Nigeria side, and Kojo, you could come in from the Ghana side, but it's basically asking about your average man in both Ghana and Nigeria, who find that who cannot afford properties that are often developed by foreign investors. So what considerations are being factored in with all the new and prospective developments, or is the focus mainly on the diaspora and the migrants? Is that something you could speak to? Essentially, it's around that affordability question. What do developers look at when they consider projects? Is the more affordable projects, do they need some type of third-party government type intervention? So what ultimately what considerations are being factored in to build for your average Ghanaian, your average Nigerian?
Thank you very much. I think it's probably best to step back one before diving into that question. Nigeria is a huge market. I think I'll probably just stick so that we can be more focused on, say, perhaps Lagos for the moment. The market can be divided into about three types of assets: the high end, the middle market, and the affordable market. The diaspora market plays in all three, particularly first two. That's the high end and the mid market. There is really no big affordable market yet for various reasons, constraints. One, land value. Two, cost of manufacturing, what I call affordable, and the subsidy. Although some states do have affordable housing, and some are being done by some specialist players, such as Shelter in northern Nigeria, in Abuja area, and things like that. And you can get homes for about 5 to 15 million in joint venture with states, where some of those states will provide the land and some developers will manufacture, but they're not very, very many. The largest market is the mid-market, where most people play in, and then the high-end, particularly certainly around Lagos. Unfortunately, there is no deep mortgage market in Nigeria, and that is one big constraint. If you want to buy a home, you will need to either have a lot of savings and then put some monies down before you are able to afford. Moms and pops, cousins, aunties, uncles help. That's where money is. And so that creates a lot of capital constraints for a lot of people. However, what the government has done more recently is by allowing people to unlock some of their savings from their pension fund and use some of this cash or this capital as deposit for homes. There's various criteria, how long you have been saving, how much you have, and a percentage of an amount that you can use as deposit for homes. I think that would help a lot in allowing locals to be able to buy and get to become bigger players in the market in Nigeria. The diaspora market does play, but that's a different market. They either get their mortgages overseas or cash, hard cash buy and transfer and buy in the Nigeria market. So how is the market helping? I'm afraid it is constrained for locals who do not have capital either to buy lump sum or to be able to play by way of installments. Most developers allow about sometimes 4 or 5 years off plan so that they can deliver and the capital is paid. Some banks have some joint venture with some corporates whereby they can fund some of these things for their members of staff. But other than that, I'm afraid liquidity is very difficult in Nigeria. That said, there are lots of players that want to create and find ways around this. One of the presidential aspirants I know wants to deal with that sort of issue in terms of creating a consumer market in real estate, in auto industry, in all sorts of sectors. If that is created, I think that can blow the market. Seriously. Thank you.
Kojo, could I get you to answer that from a Ghanaian perspective? And just before you do, the question itself was posed by Judith. So many thanks, Judith, for putting that out there.
Thank you, Judith and Philip. Kunle, I feel like we share the same sentiment in terms of how things work in Nigeria and in Ghana. You know, similar to Nigeria, there is a huge housing deficit here in Ghana. In the previous slides that we shared, there's everyone wants to live in Accra or Kumasi or Cape Coast. These are the 3 main areas. Unfortunately, you know, there's nothing being promoted for growth outside of these major cities. So you see a huge influx of people coming towards these major cities. What that does is that it actually puts a burden on land cost. And so now if you go into Accra, you find out to buy an acre of land, you're looking at almost close to about $3 million, which is unheard of. Who can afford that? You know, so that is actually New York prices. I mean, that's quite high. The other challenge that most people find is that, you know, the banks, maybe unlike Nigeria, the banks in Ghana are very risk averse. It's almost, banks in Ghana are almost transactional. You know, just deposit and take your money out, deposit and take your money out. There's no big opportunity to actually invest in large scale mortgage. And so that always becomes a problem. If you look around Accra and other neighboring cities, you see a lot of uncompleted buildings, which I'm sure is the same in Nigeria and Lagos as well. But that said, there's an opportunity that we can all take advantage of this, right? So one of the models that we've actually worked on, Philip, is that instead of having to build horizontal cities, why don't we build vertical cities? Yeah. You know, where we create, you know, we have the best use of the land, and we start building taller, and then start putting bulk housing in there, you know, in areas that support central business districts, you know, where you can actually have, and again, we're testing a project right now in the central Accra, where the financial area is, to see how we can actually put up maybe about 36 stories of building, but drop a 1-bedroom unit to about $20,000 to $30,000. Is that feasible? what that does, it encourages people who actually can just walk to work.
Yeah.
And then, just doesn't, it takes a lot of the urban infrastructure fabric out of the question. So there's opportunities that can actually that can happen. I think you can build the housing outside of Accra, but without opportunities outside of Accra, it's almost impossible to actually make that happen. And then we have to fix the finance side of things, in terms of mortgages.
So that's very much a theme that we've experienced in both markets, where you're dealing with interest rates both set by central bank in both Nigeria and Ghana at around 25%. What margins do these institutions need to put on in order to make mortgages attractive? Then into the mix, you have very high non-performing loan ratios, which indicates a lack of willingness to repay, which adds on another at least another 10-15%. So it becomes difficult for a bank, in our view, to justify putting out single digit loans when the interest rates are already 25. So that would indicate a sort of a larger macro issue. What we obviously hope is over time these rates will come down, or alternative sources of financing will be achieved, whether it's through private investors or seeing an opportunity, or the developers actually stepping in more and providing some type of shorter term finance, let's say 3 to 5 years, although that is obviously a different game, but that's certainly something that we've experienced. I would like to ask about
sorry, Philip, I'll just add to that, which is a very important issue. Having been a retired banker myself, the biggest problem for banks is their source of capital is very short term.
Yes,
3 to 5 years. Most banks in West Africa, so they cannot lend long if their capital is short term. So that is the biggest constraint. And unless the institutions like the pension funds come into this market to give bulk, or the government gives out bulk capital, even if interest rates go down, or to lend 10, 15 years is the most difficult issue. And that's one of the things that need to be solved.
Yeah, absolutely. This is a very real issue. We can talk about it to the cows come home. In terms of so I'd like to ask this to all of you. In terms of, from a developer perspective, how do you as developers explore finance? So this is investment into the projects that you are building. So it'd be great to get your perspectives from the panel. This is another question that's been posed by one of our attendees. Alas, they didn't leave their name. That's a shame. But yeah, it would be great to see what are your financing options? What do you look at? What do you consider? What do you have available to you when embarking on a project, whether it be in Accra or whether it be in Lekki Axis? How do you go around sourcing finance? Is it through historical builds, or do you go to local investors, international investors? Getting a view on that would be really interesting. Shay, can I start with you there?
Yes, most definitely. Thank you. In our case, it's been a lot of equity, and also getting buyers to come in off plan. Like the previous speaker said, or the previous two speakers said, it's almost, you're almost feeling from the start, if you're lending at over 20% for a period of about 24 to 36 months, and you having to pay that back and selling to people at the end to recover. So for example, if I was borrowing to build a townhouse in Lekki Phase 1 that would normally sell for about 150,000, and my cost of build is say 90 million, I have to factor in another 50% in interest charges before I even sell at all. And that is why most times, if you borrow traditionally, most of these projects are doomed to fail from the get-go. So what you push, in my opinion, how you push at our level with the sort of size of properties that we're embarked on, nothing close to what Kojo is doing in Kaswa. Definitely you'll need international investors and all that. But at our level, what we do is more equity and off-plan buyers. So we have off-plan buyers that cuts across wealthy Nigerians, Nigerians in diaspora, people trying to hedge against the devaluation of the Naira. That is one thing we've come to realize in the last 3 years. If you've got so much Naira, it's difficult to get dollars. One of the best things to do is to put your money in real estate.
Yeah.
To buy a property off plan, a good example is our Jolade Court property in Lekki. People that keyed in at the start, they keyed in at about 200 million. As at today, a year and 2 months down the line, they're valued at close to 300 million. They're measuring up very well against inflation, and also bear in mind that they haven't paid all of that at once. They're paying it in installments as at when due. So again, you mentioned the economic headwind earlier, and the things we're doing to mitigate against those and still push business. Part of that is giving a bit more to those who are buying. And also another secret that I'd like to share is a guaranteed return for investors. So part of what we do is we're not just inviting you to come and invest, but we're underwriting and assuring you that at the end of the day, at X time, you're going to be making this back. And it will be better for you to have invested in that property than to keep Naira. Now, I'm not saying it would have been better to keep the property than to invest in the dollar. But for those domiciled here, it's much better than to invest in the property than to keep Naira. So that's pretty much how we're funding at the moment. There are a lot of other interesting things coming up, Sukuk and all that. We're talking to a wide range of people, but so far equity and off plan. Thank you.
Kojo, could I get you to come in from a Ghana perspective on that one?
Absolutely. I think it's quite similar as well. You know, for our 1111 project, which is a hotel beachfront resort, it isn't a hotel that we're actually building ourselves. We are essentially, it's a model where we sell each individual unit to individual investors. And then we have modeled it to guarantee them a return on investment. And this model, you know, has also taught us that, you know, we can actually focus on off-plan sales to actually achieve parts of this. Excuse me, I think there's a police car behind me. I apologize, guys.
I hope not for you.
No, absolutely not. So, you know, that's one way we've actually approached it, is off-plan sales with limited partners, which essentially are buyers of our units. Our model has been quite good. So we've actually had some good traction in terms of sales. The second part, which actually started before the off-plan sales, is actually diluting our leverage in the company and the SPV that we created for this, where we sell equity to Class A equity members or Class B equity members, where they come in early, and then we dissolve some of our shares in the company. But then what it's also helped us, that is also helped us grow the project to a certain level. The third part, which is more trickier, is the bridge finance or the bank finance. You know, as you sell these units, the money doesn't come in bulk. You know, we have payment plans that go towards the purchase of your unit. So, you know, to build a project like we're doing, even for a smaller resort, it's still capital intensive. So you still need a bank to actually help you bridge that part. And so that part gets to be challenging, especially from a local market standpoint. So we're still working. We have a few local banks that have helped us, but in terms of bulk financing, that's one challenge that we are still trying to do, especially for the overall enclave and the master plan, the bigger 300-acre development.
Fantastic. gentlemen, you've absolutely been fantastic. We really appreciate your contribution. Can I just ask one last question before we sign off? Now, I'm just sharing my screen. I hope you can see my screen. This was a slide that I brought up earlier in the talk about the 600-mile stretch of coastline between Abijo and Lagos. It's obviously taking into Accra. This is meant to be, this is reported in the UK papers a couple of weeks ago. It's meant to be the world's most rapidly urbanizing region. 51 million people along this stretch by 2035, 500,000 by 2100, the largest stretch of continuous habitation on Earth. Is this something that excites you from a developer perspective? Do you believe the story? And I can see you smiling. That's good. Do you see? So for you, yes, this is a long-term opportunity. But taking into account this, it would be great to get your views on this. If you think this is either being overhyped or not, but but ultimately, where do you see from Shay and Kunle, if you could consider it from Nigeria perspective, and Kojo from a Ghanaian perspective, what makes you optimistic about the market? Is it things like this? Is this overhyped? And where do you see the opportunities? Kojo, if I could start with you in Ghana, that would be great.
Well, yeah, thank you, Philip. I look at this map and I immediately smile. Just first of all, from the opportunity, and then secondly, just to know that we own about 2 miles of this stretch, so that tells us we're doing something right. Look, when we got into this area, we realized that we were sitting on a gold mine.
Yeah.
We bought at a time where the land values in this area was very, very low, very low. Within 5 to 6 years, I would gladly say land value in this area has more than quadrupled in terms of what you can buy a plot of land for, and it seems like it's actually moving at a rapid rate in the growth direction. So it's I don't think it's a farce. I think it's absolutely real. The challenge is to actually develop the infrastructure with this. If you're able to develop infrastructure on the roads, the stormwater systems, electricity and water, this stretch of coastline is going to be one of the hyped, not hyped, but the most recognized shoreline, because we have absolutely beautiful beaches along this line. So I'll stop there without having to sound very personal.
Fantastic. Kunle, could I pass this to you? Someone who's been, in the real estate space all your career. I dare say not any longer than the rest of us. I wouldn't want to say anything about anyone's age, but do you think this is overhyped? Where do you see the opportunities?
Thank you. I think to illustrate it, can you go forward to your slide that shows Lagos, which your colleague used earlier?
So
that shows Lekki.
Oh, this one.
That one. I will use it as an illustration. And it's not overhyped. Whatever happens, the population growth in those countries and those cities will happen and are happening based on demographics. You can't stop that. But the more important thing and more interesting thing, if you look at this map, at the point where it says Lagos Island, where your red triangle comes down, yes, go to the right, the bottom of that triangle. No, come back to the left a bit, please. Left a bit, where it says Lagos Island. That point.
Oh, here.
Yes, exactly.
Yeah.
That was the end of Lagos 30 years ago.
Yeah.
30 years ago. Today, you have all these points which says Dangote refinery and all that. All of that was built in 30 years. The population of Lagos grew from something like about less than 10 million to what it is today, Greater Lagos of 22 million, because of that single road. And that goes to talk about what my colleague was saying earlier. Once you have the infrastructure, it will explode. It will happen anywhere. And I'm
Yeah.
convinced that it will happen. The population is there. If the infrastructure is there, it can happen and it will happen. I'm not surprised at all.
Fantastic. Shay, can I give you the final word?
Yeah, thank you again, Phil. I'm in full agreement with the last speakers. This is the stretch. This is the new Lagos, to be honest, and this is where we all need to play. Lucky enough, I visited Kaswa and Pram Pram as well, and I agree that that entire coastline is I would say, the future of West Africa. For Lagos in particular, and in Nigeria in particular, like everyone has said, infrastructure, infrastructure, infrastructure. There's a massive opportunity in Lagos because most of, pardon me to say, middle income earners in Lagos to high income earners in Lagos are all cramped in a small island.
Yeah.
There's one road to get in, there's one road to get out. What it tells you is if there's more infrastructure, if there's better infrastructure in many different areas, then people would be able to, people can spread out, buy homes in different places and get themselves to where they need to get to on time. So already in Lagos, you can see infrastructure is coming up, like the Expressway, the free trade zone,
Yes.
the airport, the seaport, all of that can only translate into prosperity. So we hope for political stability. We hope that would happen. Like they said, any of the three leaders we get, I don't think it will have much effect on the demand of real estate, but it will be more around the economy and being able to get the economy to recover and get more people within the net. But definitely, this is the corridor to be. And I'm in agreement with everyone else. Infrastructure, mortgage system, finance in place will be fine. Thank you.
Okay, great. Well, that is a very positive note with which to conclude the this webinar. So Kunle, Shay, Kojo, as well as Wilson, who had to drop off. Sincerely, thank you so much for the generosity of time. We wouldn't be able to, as a company, be able to host these webinars without your generosity. So it really means a lot to us. Thank you very much. We'd also like to thank the attendees. We will be sending this out. If you have any questions whatsoever in relation to what CESO does or in relation to what our developers do, please do not hesitate to ask, and we can put you in contact. I think clearly we have spoken and identified headwinds that exist in both markets, whether it's inflation, currency depreciation, but there still remains an overarching positive story around population growth, urbanization, and not least from a practical level, this stretch of land, which if supported by improvements in infrastructure, as Shay said, which will inevitably happen, this stretch of West African coast will blow up from a real estate perspective. So there are clearly huge opportunities. It's why CESO is there. It's why we love the space and why we love working with all of the panelists. So on behalf of myself and the entire CESO team, thank you very much for joining us, panelists, and thank you so much to everyone who joined online. We hope you have a wonderful day, and please join us for the next CESO webinar. Thank you very much.
Thank you, Philip. Thank you, everyone.
Thank you.
Thank you, everybody. Bye for now.